Son, Chief Executive Officer of CPR-AM, Chairwoman of Paris Europlace Investors Committee, as well as Stéphane Boujna, CEO of Euronext, Xavier Gir, Senior Group Executive Vice President, Group Finance, EDF, Chairman of Paris Europlace Corporate Committee, Jean Lemierre, Chairman of BNP Paribas, Vice Chairman of Paris Europlace, and joining remotely through webcast, Nuno Matos, Chief Executive Europe of HSBC.
Ladies and gentlemen, hello. I'm Géraldine Amiel, I'm the Paris Bureau Chief for Bloomberg News. I have to say two things. First of all, I'm pro bono, and that's very important. And the second thing is I wouldn't be able to moderate the panel if there hadn't been diversity on the panel. This is a Bloomberg rule. It's this, yeah, thank you, yeah, absolutely. It's platinum rule. So more women, more diversity, and I would like to thank Arnaud Bresson for having thought of me. This is a very interesting panel. I thought it was actually, the topic of it was actually a bit bold. When you think of it, most of the globe is currently in economic recession. The pandemic remains quite active, and we are all the proof of it because we're wearing masks and everything. It's denting prospect of a substantial and quick improvement, and nevertheless, here we are discussing a path to economic recovery, and that's quite a challenge. One fascinating consequences of the various lockdowns across many countries, notably in Europe, is that households have increased their savings. Here's one point. In France alone, the amount of what is seen as excess of forced savings should reach 100 billion euros. This is a lot by the end of the year. So here's one point. Another one is that confidence surely is key on the path to recovery, notably to prevent these savings to become permanent precautionary savings. And corporations need to keep investing and hiring. The renewed local lockdowns, the second wave, as we call it, doesn't look good. And in France alone, the official statistics office, INSEE, if you saw it yesterday, cast a gloomy look over the last quarter of this year. So what kind of economic recovery do we want to foster in such a very weird economic environment? And on top of it, we have to add the fact that far from going back to normal, temperatures across the globe, devastating impact on the environment, our environment, clearly show that whatever economic recovery there is, it'll have to take the climate warming into account. So it's really a lot, and we won't be able to cover everything in just 1 hour, but nevertheless, I'm very fortunate to have with me discussing this Valérie Baudson. She's the Chief Executive Officer of CPR-AM, and she's also the Chairwoman of Paris Europlace Investors Committee, so important. We have the excellent Stéphane Boujna, Chief Executive Officer of Euronext, who's been quite busy, nevertheless, this year. Not very much of a confined man, if I may, as far as M&A is concerned. We have Jean Lemierre, Chairman of BNP Paribas, and we have Xavier Gir, who's the Executive Director in charge of finances for EDF, and we have, that's why I had to have a lengthy, introduction, is that we had a little bit of a communication issue with HSBC. We are very fortunate to be joined with the HSBC Chief Executive Europe, Mr. Nuno Matos. Mr. Matos, welcome. So it's going to be a bit clumsy because it's a hybrid panel. We have people here and there's Mr. Matos in London, I think. So you have to forgive me, but I'll try to make it as smooth as possible. So let me ask a question first to each and every one of you, Madame Baudson and gentlemen. For next year, I'm not talking about the end of this year, but for next year, a lot of governments and agencies have released quite optimistic growth forecasts. And from your respective point of view, how confident are you that we are on a way towards an economic recovery? I'm very doubtful, but that's the nature of my job, beyond the fact that I have mauvais esprit. But so where do we stand right now? Are we at the start of a potential recovery? Are we nearing the end? You can't say that, but where do we stand? Madame Baudson, please.
Thank you, Geraldine. It's true that economic forecasts have been reviewed recently upwards. When we looked at the US GDP contraction level, they were planning -8% for next year a few months ago, and it's -4 today. But my conviction is that we are actually facing a recovery, what we call, or the economists call, a recovery in K, which means a new letter, which means that there will be some sectors actually really which will be able to rebound significantly next year, and some others who will go on falling. Just to give you an idea, even if it's a bit extreme, Amazon value has increased by 80% since the month of March. Some airlines have decreased by 20%, so there is a trend of deconnection. At the end of the day, I think there will be a recovery, but honestly, Geraldine, as of today, there is so much uncertainty between the US election and above all because of the COVID. We need to wait for a vaccine to be really clear on that question.
Gentlemen, Monsieur Gir.
Well, it's not so easy to give a clear forecast for next year. Maybe some words about our experience as far as EDF is concerned. I mean, for next year, of course, we expect some recovery in comparison with this year, 2020. But definitely, we do not expect coming back to where we expected to be before the crisis. So why that? I mean, two key elements. One is the lack of demand, and clearly the demand is a key driver for growth. And when we analyze, for example, the demand for electricity, today we're still below 3 to 4% in comparison with last year. And for the time being, when you see the pandemic, when you see the situation, I mean, there is no clear sign of a significant growth of the electricity demand. Second point, as regards the nuclear generation, we had to reorganize, to reschedule the entire maintenance program in order to the lockdown period. And this will have quite long-term effect because you have to reorganize this maintenance program not for 1 month, not for 2 months, not for 1 year, but for 2 to 3 years. So it has quite a long-term impact on EDF, on our suppliers, on a whole industrial sector. And so that's why I think that next year, of course, will be better than this one. We all hope that, but definitely it will not be as good as it was expected. So that's why, as many industrial corporates, we had to take very stiff measures. Maybe we will come back to that in order to face this situation.
Monsieur Boujna.
Well, I think we are just out of the woods of phase one, which is the emergency phase or the adjustment phase. I just want to share with you a few data points. Some of them are intuitive, others are not that. Some of them are counterintuitive, which is the level of the indices as of today and how they compare with the last time viewed. So, if you put aside the two US index that at their historical height for all sort of reasons, including the weighting of the GAFAM in their composition, but S&P 500 and Nasdaq 100 who are at the historical height. And if you look at when was the last time the current level has been observed before 2020, So for the Dow Jones is at the level of December 19. The CAC 40 is at the level of January 19. The DAX is at the level of October 19, and the AAX is at the level of September 19. So those days were not recession years. So what is, and if you believe that there is some form of correlation between the level of capital markets and anticipation of GDP growth, there is an information there. Now, clearly, the main buyers, I think, which is was known by everyone, but which is obvious or flagrant in this picture, is that if there is a moment where there's a huge gap between what is the composition of indices and the real economy, the GDP, that's precisely the composition of these indices. To take a most visible picture, the sector of hospitality or restaurants, whatever, is not very well represented in big indices. You have 1 or 2 or 3 big groups on the CAC 40 that really operate in this sector, but you have hundreds of thousands of restaurants that are not listed anywhere. So in that particular segment, the impact on the GDP of this particular segment is massively worse than what you can observe in the weighting of the CAC with the companies you can all have in mind. So the first thing is that we should be cautious about what we look at when we look at capital markets versus GDP. And when I look at, I asked one of my guys to give me year-to-date what has been the average performance by sector to get the two extremes. So the healthcare sector is plus 48% year-to-date. The technology sector, I'm referring here to CAC 40 companies. The technology sector is plus 17%. And on the other side, you have the consumer services, minus 17, industrials, minus 13, consumer goods, minus 10. So what we observe, again, through the specific unique lens and not complete lens of capital markets, is that there is a massive rotation of value, a massive differentiation of sectors. So I think we have seen the full impact of the fiscal stimulus. Clearly, the fact that companies' bills have been paid by guaranteed loans and that companies' salaries have been paid by all sorts of chômage partiel or whatever you may call it in various countries has been very important to maintain the operations of companies, not to destroy the production apparatus, and that's very important and it's very encouraging for the future. But we get into phase 2 or phase 3, whatever you want to call it, where recapitalizations, equity injection is necessary to finance losses, to absorb losses, because there is no other way to make ventures companies sustainable. The good news, which is in my view a very unique alignment of planets, is that because in parallel to the fiscal stimulus, you had massive monetary stimulus, interest rates are going to be low for the foreseeable future. And since no one is going to make money in our lifetime by buying fixed income instruments anymore, because after inflation and management fees, you lose money when you buy fixed income instruments, there is a unique opportunity to match the demand for equity within the companies that need to be recapitalized, and the fact that from an investor point of view, equity is the only asset class when you can expect some form of yield. So I'm confident.
Thank you. Mr. Matteau, what is your view of this path to recovery? Are we nearly at the beginning of it? Are we getting there? What is your view?
Yeah, I think, Geraldine, we are clear at the middle, but with a lot of question marks. I think, to state the obvious, this will depend on a medical solution this time, not so much on a purely finance one, okay? I would say that undoubtedly Q2 was more or less as we expected, a significant contraction of 12% in the European output in the quarter. That was not a surprise. Q3, to be honest, started much better than I think most of us expected. And there might have been a little bit of repressed consumption there. Consumption levels in general, they bounced back very strongly. And to the point that our forecasts for Q3 point now to to a growth of 9% quarter on quarter. And we previously had a growth of just 6.7. So it was a meaningful correction to the upside, if you want, on Q3. Having said that, it's also fair to say that Q3 ended in a worse place at the end than what we expected. And especially the service sector has been tremendously impacted. So Q4, I think, will tell us a little bit where we are. It will be kind of the new normal during the crisis in terms of levels of consumption and production. So we have to wait a little bit more. In line with that, we expect 2022, at the end of 22, to have a GDP which is still 2% below what we had before the crisis. So the global economic output for Europe will still be below crisis after 3 years, and that's an important element to put on the table. It's also good to say that this time the regulators, the administrations were very fast to act, and they acted, I think, in the right direction and with the right level of the right dimension, I would say. And that includes the job support schemes, for example. That also includes the amount of liquidity that was provided to the private sector and to the banking system. And in the short term, we clearly crossed the desert with, let's say, not so many casualties in Europe. Having said that, from a fiscal perspective, that's very, very expensive to maintain. So it's likely that as we move forward, those elements could not be sustained. If the crisis is converted from a suppressed demand element into a significant disruption of, let's say, the supply, then we might have a worse situation than one we are expecting, okay? In that regard, I would say that we welcome tremendously the fact that the EU was able to, let's say, put on the table a very significant recovery package, which we certainly welcome, and we would like to see it move forward in order to sustain this recovery. And certainly we'll discuss how to invest those monies. But what I would say at this moment is I am positive, but clearly the dimension of the crisis, which is a medical one, does not allow for a clear determination of the future at this moment.
Thank you very much, Mr. Matos. I know this is not very comfortable for you. I wish you had been here, honestly, but perhaps next time. Thank you. Let me turn actually to another question then. And Monsieur Matos just mentioned it. We're very fortunate that somehow the European Union gathered together and discussed this huge package. And that prompts me to ask the question to all our panelist members. Can we expect government to be part of the solution? And where should they stand? And I want actually to relate this to what the IMF report for October just said, which is there should be public spending, massive public spending. I'm summing it up. It's a bit more subtle than that, but actually what the IMF says is that the government shouldn't be shy of spending a lot of public money. And that is probably good for the short term, but then you wonder, because we're talking about also fostering a sustainable recovery. Monsieur Lemierre, what is your thought? Should government have a bigger role?
They have already. They have taken a crucial role at the beginning of the year. I think if they had not been there, we wouldn't be here today. Let's be clear and honest. And when you speak about government, I mean central banks and governments. So they have done extremely well. When I look at the current situation, you know, I can look at figures, but I think in this format, we should listen to clients, to the corporate sector. What do they say? They are eager growing their business. They are absolutely not on a wait-and-see attitude. They want
They want to sell. They want to, yes, they want to sell, they want to invest, they want to grow. Now they have questions. They have a lot of question marks. And they listen carefully, and I go back to your question, they listen carefully to governments. And first they listen, maybe for the first time, to ministers for health. The ministers for health, or the virus, they have the key to the short-term situation. It's clear that the stop and go on the virus and contagion has a big impact on anticipations. So the more they trust it's going to be put under control, even if it is difficult and harmful, but they understand what's being delivered, they will do it. So, because normally when we speak about macroeconomy, nobody speaks about ministers for health, but these days we should. And they have a big role. Then the big role is in the hands of ministers for finance. They have to offer financial support, and they can do it because central banks are open for this. When I listened to the Jackson Hole speech of the chairman of the Fed, what do I understand is simple, is you, Congress, please spend money, support the economy. You, private sector, invest, support the economy. And if there is inflation, I don't care so much. I open the door for more inflation. Don't be worried. I shall not kill you. That's very important. I'm sure the ECB is beginning to deliver quite the same message. And when I look at the speeches made by the chair of the Fed after Jackson Hole's speech, this is exactly what he said. He looks at the Congress and says, do it. Do it. He looks at us, at you, do it. Do invest. So they have a very important role in making this kind of assessment and saying, do it. Of course, they have an eye on consumers. And you are right, the 100 billion story for France is a huge one. There is plenty of savings, of liquidity in the system. And people need to be reassured, and they fear unemployment, which is an extremely important question today. And I go back to the government. I think the key role of governments today is maybe to use money to support, but mainly to convey a message of confidence and trust. Not so much about the future. Of course, they must have trust about the future, but they must convey a message of confidence to the investors and the business, which is, if it goes really wrong, we shall be with you. And that message can be enshrined in measures. And we begin to see this. I shall not go too far, but we have spoken a lot in Paris about how to deal with the debt situation of companies. I have made proposals to grow funds to support the prêts participatifs, quasi-equity. Private equity has done the same. And this is the message the government should convey. I am with you. Do the job. If you have a difficulty, I am with you. It's the same with the cut of production taxes. I am with you. I support you. I support your efforts. It's a very new attitude for governments. And it's not only about money. It's about understanding, consistency over time. And of course, one key challenge is the question about unemployment. And that's a key debate. Unemployment is growing for reasons we know well. Some people are not protected. And we have a question with this. Behind the question of unemployment, you have training, how to offer jobs to people in a sector which are massively hurt. And we know the sectors which are massively hurt. Tourism, transport, and so on. And we need to put in place efficient system to help them to change, to transit to new activities. So I stop here, but you understand my key message. The way I see the current situation is after a deep crisis, we have had a V-shaped recovery. That's the third quarter. We have had it. And now we are in a situation in which we may muddle through. It can be difficult, exactly what you have said. And the only way to get out of this is the mobilization of the official sector and the private sector working efficiently to create confidence. And of course, governments are absolutely key on this.
Madame Baudson.
Wait, maybe I absolutely fully agree with Mr. Lemierre. I might add one point. It's also very important, these kind of messages, typically the fact that our French Prime Minister has announced the decrease of corporate tax to 25%. There is another reason why it's so important to send these kind of messages, because it will bring more foreign investor in Paris marketplace. We know very well that it's essential. After the Brexit, Paris marketplace will be the biggest financial marketplace of Europe. We must remind it. So we bear a very strong responsibility within Europe in the future. And that's why these new signs of the governments are so important today.
Yeah,
Monsieur Girier.
yeah, I fully concur. I mean, and government has already done a lot. I mean, during the peak of the crisis and during the year, I mean, by backing some loans, by being able to postpone taxes, to cut taxes, and now yes, to have this positive role in order to maintain or to restore confidence. I think this is absolutely key. This was really a key point in order to go through this crisis. I think also that we, our key stakeholder, have also a key role. I mean, Jean Lemierre made a reference to his role in order to support quasi-equity loan. We did the same with the issuer corporate committee within Europlus. And clearly, I think it's a key way in order to sustain a balance sheet of the corporates. We worked also with Euronext and with Croissant Plus in order to highlight how important the stock market is in order to strengthen the equity of the corporates. And definitely, I think it's absolutely important to give better visibility and maybe to alleviate some constraints on the financial stock markets in order to give to them always a better role in order to finance the growth of the corporates. So we as key stakeholders have also a key role to play. And as corporates, we have also, for example, as regards EDF, we definitely want to maintain our investments, which are in the range of 15 billion euro per year. So it's a huge investment. And our key goal is to maintain these investments despite the impact that I highlighted of the crisis. So this is why we have decided to cut some costs, to make some disposals, to make some innovative refinancing with green convertibles in order to have the capacity to finance our investments. But definitely, I really think, and speaking also as a CFO, I think it's very important to be bold enough to maintain our investments, to be very strict on all the specific costs, to be very innovative in our financing in order to go forward and to also help all the industrial sector to go ahead. You know, when you are such a key investor as we are with this 15 billion euro per year, we have a major impact on so many corporates of different sizes, and it's key to maintain them. It's key to maintain their competencies. It's key to maintain the attractiveness of our industries in France. And so I really think that as corporate, we also have this key role. So during this period, I really think that between the states, between the key stakeholders and also corporates as we are, definitely want to be in this positive mood in order to restore confidence in the long run.
What should be the priority? Pardon.
I know.
Go ahead. No, go ahead.
Okay. No, just a few words on your question about the states being part of the solution rather than the problem. I just want to share with you a few thoughts. I mean, we should not underestimate the massive amount of cultural, ideological change we are facing over the past 2 or 3 years, all of us. I mean, there are 3 things that we never learned at university. 2 were obvious, the others were, and the third one is debatable. All of us really left university and we did most of our professional life without having heard the word ESG, and it is changing our life big time. The second one is not, none of us has been explained at university how is the world with negative interest rates. I mean, or you studied in better places than where I studied. And third, the sort of overall ideological buzz is that government spending is bad and that it's inefficient, except in very extreme circumstances. Now, we are here in a situation where all those things are changing, and we should not underestimate the sort of reset, reboot that we need to put in our minds to get back to a world where government spending is not that bad, and where we confront with the reality of those rivers, those oceans of public spending. The difficulty, though, which we should not underestimate, is that at some point of time we will have to confront a painful question, which is who will pay for what and when. You know, I just want to share with you a piece of wisdom. My father left school when he was 13, and he hardly writes through a few words. But when we were little kids and when we were in all sorts of situations where we were telling him, oh, that's free, we can get it, he was always saying, no, nothing is free. It's paid by someone else before or after, but it's not free. It's paid by someone else at some point of time. And that's exactly the point. We need to find together a solution where we can transition in a calm way from a world where there is a reality where a lot of government money was spent, and we know how it is funded, towards a situation where people understand that a lot of money being spent doesn't mean that this money is free, and that some people will be washed out if it is not paid back, or that we need to get organized to pay it back. And that transition is not going to be easy. And that's the point I wanted to make about government spending.
Why would you say we're changing our minds? We're just being French here, right? When we think that government spending is not so bad.
No, I would say we were taught that government spending is bad when we were young, and the reality.
But we're French, though, so actually.
Okay. Maybe forget about. I dropped the point.
I'm
if
joking.
it was not clear, I drop it.
I have mauvais esprit. Monsieur Lemierre wanted to react to you.
No, I think all of us in the room, we understand well Stéphane Boujna's wise words. For a French, public spending is not bad. What is bad is taxpayers' money.
Yeah.
So if you find a solution to spend money without raising taxes, it's okay. But it's not only a joke. It's maybe, in a bizarre way, a situation in which we are. We have the impression that governments can spend money without raising taxes, even maybe by reducing taxes. And of course, at the end of the day, it doesn't exist. May I simply use Stéphane's comments, once more, it's very wise, to add one comment, which of course comes from a banker. Behind his remark, there is a question which is, let us use ugly words, discipline, which is selectiveness, which is, should we have helicopter money, or should we make an efficient use of money? And I think that's a key challenge for our industry. Banking industry, asset management, insurance, investors. Because normally that could be an efficient mix of tools using cheap money created by the ECB, but making sure it is allocated where it should be. And we have to keep this in mind because we know we'll have to pay back. And of course, we can pay back only if we make an efficient use of the money. It's easy. That's the wisdom which is behind your words, Stéphane. But this is a challenge for the industry to be efficient. I say this because we have seen the debate. You know, in the banking industry, in March and April, we have disbursed massive loans to the economy at a time. Sorry, Stéphane, markets were shut. We have done the job. Otherwise, the economy would have collapsed. So we have disbursed massive amounts of money in Europe and in the United States American banks have done the same. You know, all the banking industry have done the same. What we know is that when we support companies from a liquidity point of view, we also need to keep an eye on the sustainability of the company. And that's key, we should not forget. That's maybe the lesson. And part of sustainability, you have finance, but more and more, and this is good, we have now ESG, and we know that this is maybe the most important cultural change you have mentioned. Sustainability is not only finance, but the way we behave. And if we put this together, there's a nice opportunity to try to do well.
Thank you very much, Mr.
Geraldine.
Lemierre, because I'm not doing a good allocation of my time, of your time here, so I'll have to be efficient. And that leads me to the next question. You're talking about sustainability, and it's not just about financing, but it's about how we do this and the choices and how we behave. And that brings my next question is, what kind of a recovery do we want to foster? And let's talk about a green recovery and what should be the priorities. Mr. Matos, what is your view on financing a green recovery, making development sustainable? Do we need the right financial products, and do we have them here in Europe?
Yeah, so I think one of the major elements that were already mentioned is the fact that the industries and the jobs that will be there after this crisis will be significantly different than those that we had before. COVID just accelerated, by the way. It's not that COVID was the factor. It is just an accelerator. And coming back in a related way to this, obviously, when the governments talk about or think about where to place the money, I think clearly a priority is in unemployment. This crisis is significantly different from the previous one. It's not driven due to a business model deficiency. It's a medical crisis. So actually, the business models of some companies or even the system was actually in a good place. So it deserves some money to support, let's say, companies and people during this, let's say, this V-shaped recovery. Having said that, the future will be different. We should not expect to have the same jobs and the same sectors in the next years. And if there is one area where Europe is clearly leading in the world, it's the transition into a green and sustainable economy. And it's not a small thing, because clearly Europe in this case is betting in the future. We should obviously understand that, and we need to consolidate it. I'm just going to give you some elements. Europe has a huge savings ratio, so there's a lot of liquidity to invest and to save. Europe is by far the region where we have the most focused and engaged ESG investors. Okay, the euro is the currency, is by far the biggest currency in the green bonds. And in Europe, companies, investors, and issuers are behind the Green Deal and this net zero commitment from the EU. So we have all the conditions to dominate this market in the next years, in the next decade. And we should really take advantage of it. I really believe that there are today enough products already to be able to support the development of this market in two ways, either through the debt markets or banks just delivering sustainability-linked lending into the market. But it's fair to say that one of the components to sustain this, it's, if you want, administrations and regulators to make sure that regulation is user-friendly, that regulation is simple, that is going to enable small companies to have access to sustainable and green debt markets in a very inexpensive way. And if we do so, I think this is one of the clear avenues to regain growth in Europe. And I must say that, unfortunately, as you know, Europe as a continent has been showing slow growth for a lot of years already. So this is a unique opportunity to change the game. And if you combine that with the European recovery package, which is by far the biggest stimulus and greenest stimulus ever, if you combine those two, we might start to change the game. So I'll leave it there for you to consider.
Madame Baudson.
No, I absolutely fully agree. I think we have actually two types of priorities right now. We have a very short-term one, which is to bolster equity of companies, because we know that the debt level will be much higher in the short term. But in the long term, I think as a representative of the largest asset manager in Europe, Amundi, as well as my role at Paris Marketplace as chairman of the Investors Committee, our real priority is to finance sustainable growth. We have to choose. I strongly believe that we should benefit from this crisis to help channeling the money towards the right directions. Actually, the savings in Europe by the end of the year, the additional savings should be 1.3 trillion euros, which represents 10% of Europe GDP. So the amount of money is absolutely huge. And for the time being, it's not so much invested in equity. So I think this is our role, to try to channel it short term to help cross the crisis. That's what we've done at CPR with launching our Ambition France Fund. But long term, towards a transition. A transition which will be greener, that's for sure, and I fully agree. As I work with investors in 37 countries in the world, I can confirm that we have in Europe a leadership which is absolutely clear. And I would add that we have in Paris, in France, a leadership in that regards that we have in other area in finance, to my knowledge. So we must leverage on it. But we should also think about channeling money to a sustainable growth which will be fairer. I think that society issues will be more and more important in the future, not only our environmental issues. And we need to make sure that we also look at the companies in a way where we favor them, who will be careful in terms of health of their employees, security, a reasonable CEO-P ratio, diversity, of course, because these will be the one in the future who will stay, which will stay. So for me, this is really our goals as investors.
Monsieur Gir et Monsieur Boujna.
Yeah, maybe a few words. First, I fully concur with what Valérie just said. I mean, and we already discussed about the need for working more and more about the S of the ESG, which is for the time being maybe the least focused on. And definitely we must work on inclusion in our corporates. We must work on our impact on the local communities and territories. We must work on the all these aspects, I mean, which are absolutely key and which for the time being are not enough focused on. The second point I wanted to make in order to answer to your question, is the recovery green and should it be green? Of course it is, and of course it has to be. I mean, no question about that. And I mean, it's very clear. I mean, the recovery plan is a massive stimulus for green growth. I mean, for example, as regards energy, there is a massive stimulus on hydrogen, 2 billion in 2 years, 7 billion between now and 2030. Massive stimulus on the energy efficiency, for example. There are also some allocation on the nuclear low carbon energy, for example. So, I mean, this recovery plan is definitely a massive stimulus towards green recovery. As far as corporates, once more, also we notice that more and more the green bonds or the impact loans or the green convertible are very efficient because they attract more and more investors. So they are more and more competitive, and so definitely it's also a stimulus in order to develop these investments. Maybe one point here is that, or 2 points. First, I mean, it's also very important to keep very strict selection criteria in our investments, because today is maybe very easy to invest in investments that are green labeled. So it's very important to be sure that they have an efficient impact on the environment or on biodiversity. So it's very important, and of course that they also are value accretive. And second point, I also think that it's very important to not only to be sure that we invest in these green investments, but that we are in a position to develop once more an industry impact, because it's quite easy, I mean, for major corporates to invest in green investments, but it's important that all the corporates, including ETI, including SMEs, be in this position. And maybe sorry, last point, which is about regulation. And regulation is not only, I mean, about green financing. It's about also having consistent regulation in each our sectors. For example, the European taxonomy, it's absolutely key that we have a clear taxonomy, science-based taxonomy, technical neutral taxonomy. It's very important that we have also clear visibility based on consistent regulation and consistent incentives. For example, as regards carbon price, I mean, the EU ETS are quite efficient, but not that much. So they could be also more efficient than even that they are today. Even it's has been already improved in comparison with some years ago. So it's important that the incentives are not only dedicated to green financing, but also that we have consistent regulation in each and every sector.
Just a few comments on my side, and that may sound pompous, but I strongly believe that what we are facing here is very unique and unprecedented for our generation, because most of our professional life has been dedicated to lecturing the rest of the world how they should adjust to the wise way finance was running things. And now we are facing the reverse. We are being lectured by the rest of the world how we should adjust the way we operate to a new set of collective preferences. So the amount of changes should not be underestimated, because what is at stake is really a question of collective preferences. I mean, and that's completely conjunctural. I mean, there was a time when the only thing to do with surplus was to build pyramids. There was another time when the only way to allocate smartly money was to finance crusades and build cathedrals. There was a time when the best way to allocate money was to build Versailles and finance wars between religions. There was a time when it was all about rebuilding Europe after the war at any cost. Now, it's all about sustainable growth, which is fine. It's a new wave of new collective preferences. I believe in it because I think it's very progressive. It's creating more opportunities to more people, so it's great. But it's just as fundamental as what I've described before. I think Europe has a unique role to play. We are much more advanced than the US, both in terms of issuers aware of what ESG means, as well as investors understanding what it means. As far as Euronext is concerned, we have the leading ESG bond franchise with more than 152 billion of notional assets issued under green bonds. We have the leading ESG index franchise that is being used, and actually BNP is a key player of the low carbon 100 index that is a reality in the market, and we are spending a lot of effort to support issuers in their ESG transition. So I think Europe is in the best position to capture that wave. What is really, really encouraging, and apologies again for using an historical analogy, which might be very aggressive, what is really encouraging is the big guys are taking the switch and going to accelerate the transition. When at the beginning of this year, both Amundi and BlackRock, in the same week, a few days before Amundi and a few days later BlackRock, made a strong commitment to have, I think by the end of 21 or 22, I don't know, all 21. At the end of 21, all their funds being ESG compliant, they did what Emperor Constantin did in 372. When the guy before dying decided to convert to the new religion and to become Christian, he just delivered to the new religion all the infrastructure of the empire. The prefect to become the diocese and the roads and everything. So he said, this is for the new religion. When BlackRock and Amundi say, okay, we go for it, they become an accelerator of the transition. Because I don't know whether finance is good or bad. One thing is sure is that finance allows for a lot of information to move very fast and to change incentives very massively in a very wide group of people. In this respect, I'm very confident that this conversion of some buzz makers and rainmakers and flow drivers is going to accelerate the ESG migration big time.
Okay. I should expecting from the pyramids to Constantine and everything. But we're arriving to Europe, which you put on the same plane as Versailles and the pyramid and the cathedrals and the religious wars. I'll make something out of it at the end of this panel. Don't trust me, Monsieur Boujna. That leads me to my next question, and it will be the last to each and every one of you, and I would like you, Mr. Matos, to start answering it, to be the first one to answer it. We're talking about Europe. We're saying Europe has a tremendous opportunity. Europe is best placed. Europe has all the tools, or nearly all the tools and everything. We know that the European Union, after a lot of push and a lot of hurdles, nevertheless came up with a huge package, and it was seen then as a fantastic way forward to boost the continent's economies. But my question is Europe actually doing the job? Has it done the job? What more needs to be done? And I would like to talk about, is there such thing as a European economy? Because there's a lack of coordination, there's definitely a lack of utility when it comes to the policy mix. So we keep talking about Europe, but is there such thing to start with? And from your perspective as an international bank, Monsieur Matos, what's your perception of Europe and what must it do to attract international investors?
Sure. So we have to remind ourselves that Europe continues to be a huge economic bloc in the world. It represents a quarter of the global GDP and a quarter of global FDI. And even more important than that, it represents the biggest trading bloc in the world. 40%, almost 40% of the trade flows across Europe, okay? So Europe is the biggest trade partner of China, is the biggest trade partner of the US. It's one of the most relevant trade partners of the rest of the world. And that means that Europe is an open economy and is open for business with all countries in the world. That's very, very important. And obviously for an international bank like HSBC that connects the world, and we are, if you want, the leading bank in financing trade and capital flows, that's, if you want, that's an element that we see in Europe, which is very, very important to us, okay? Also, from a values perspective, from an approach perspective, as I said, the fact that Europe is the leading region in approaching a green and sustainable transition, it's also very, very important to us. We are the leading bank in Europe for sustainable finance, and that's a perfect match also for us, okay? From a values perspective, I think it's also undeniable that European values and principles are, at least that's our view, they are a perfect match with the way we look into the future and the way we look into society. On the other side, as I said, we have to recognize that Europe has been, and I'm talking about Western Europe for the most part, and the EU construct, has been growing in a very slow mode for many years already, okay? And for example, for banking, it's a very tough region to operate. Everybody knows that, it's no secret. Slow growth, negative interest rates, fragmented competition, just to name some. It's a tough place to operate. Having said that, if we crystallize, if you want, some of the new waves, let me call it like that, that we are observing, the fact that European countries are trying to get together and really going from a fragmented approach, which is what we have today. Even though I think we have a single European market, it's also obvious that it's quite fragmented. If we believe that we will take steps in order to improve our banking union, in order to improve the, let's say, the standardization of the corporate framework, labor market, insolvency laws, tax regimes, if we are able to harmonize that, create a real capital markets union, so important to put us at the same level as the US, if we are able to really come together and show real solidarity, as again the huge recovery package demonstrates, I feel we have a very good chance of turning to a different pace of growth and in a more inclusive continent and region. So that's the way we see Europe. And obviously we are waiting for all these signs we have been observing to move forward at pace.
Thank you. Madame Baudson.
Well, first of all, I would like to remind that Europe has done Europe has done great over the past few months, both on the ECB side and the Commission side. The 750 billion recovery plan is honestly just a new future. So I feel very confident. I believe that considering the geopolitical forces that we have, if we want to keep our European sovereignty, we need to have a very strong European economy. So that's the positive part. Now, what I'm really aware of is that we need to accelerate the capital markets union. I think everybody will be agree on that table. We need to support a strong financial sector and a European financial sector if we want to protect our interests and to remain strong. And last but not least, but I already said that, I think we must leverage on sustainable finance, because this is once again the only area where we are really leader, and we must leverage on it.
Thank you. Monsieur Lemierre.
Well, it's always a difficult question, you know. So I'll make three quick remarks. The first one, Europe has done well, but if I may say, because of the social model we have. We should never forget this. The commitment of societies in Europe has been, as much as possible, not to leave anybody aside, which is not the case in some country across the Channel and in some country across the Atlantic. We have a specific social model, and I think we have done well. And I know American analysts say it is costly, it doesn't help you to rebound, it is not flexible enough, there's not enough volatility, but we have respect for people. So you understand what I mean. I think we have done well because we have a decent social model, and I'm proud of it. And nobody should forget, notably investors, because there is sustainability behind this model. This is true in France, this is true in Italy, in Germany, everywhere. My second remark is, through the crisis, not the European crisis, but the global crisis and the trade crisis, we begin to understand better the value of the single market. When you speak with German companies or French companies today, they say, okay, but if we have less clients abroad, meaning in the US and in China, let us work with clients at home. And maybe it explains a lot of political changes which has happened during the summer. The single market is key. There's a huge value embedded in the single market. And what we speak about, because we are impatient, we would like to see reforms, changes, progress, but what we speak about at the end of the day is the single market. I regret the British have decided to leave, but the value of Europe and our value is a single market. And as a banker, I'm very proud to serve that market. I do not fully agree. We need, it's our home. That's the way we know well how to do, and we are happy. Now I'll make a third quick remark. I will take two examples, in a positive way. One of them is improve coming from the private sector in the financial industry. One of them has been mentioned by Christine Lagarde. Many banks here have taken the initiative of the European Payment Initiative, which is great. This is exactly what we need to do, and it's moving forward. And it's a private sector initiative, and it's being supported by official institutions. And if I can take a second example, you will not listen to me, but what's happening in the infrastructure sector, financial infrastructure, the bourse, what is happening under Stéphane Boujna's leadership, under Deutsche Börse leadership, sorry to mention your competitor, but all of this is vibrant. It is Europe. It is in the making. And even in our industry, I say even because most of the time we are pessimistic, but it is changing. And you have in the panel today somebody who's making Europe different. And this is great, and we should acknowledge this. And I'm very proud to speak with this in Paris.
Merci. Monsieur Gir, very, very briefly, please.
Yeah, very briefly. Could we imagine this crisis without Europe? I mean, we weren't there. I mean, so first, yes, Europe has made a great job, and definitely we need to go on and to improve capital market union and to go on. Second thing, what we need also is very consistent European regulations. I spoke of the taxonomy. Of course, it's key for our sector, but it's not the only one. It's just an example. So it's absolutely key that Europe also takes into consideration the impact of these regulations on the different corporates. And third point, and last point, I think it's absolutely key that to keep in mind that there is no wealth, there is no employment, there is no well-being, there is no peaceful society without strong corporates and without the capacity of investing and giving job to people. So it's very important also that Europe takes that into consideration, its regulation.
Monsieur Boujna, don't bring us back to the pyramid or the
Just to
caveman.
comment, I think I see Jean-Jacques Barbaris in the room. He mentioned a few months ago that within Amundi there was a scientific survey or effort to try to show correlation between sustainable growth and the social cohesion of societies in a world where talents are so important, sustainability of demand is so important. So beyond the sort of quasi-emotional statements made by Jean, there is something very fundamental that is documented by science. The second comment is that the capital market union will work if we had in the mindset of the Commission a concept of competitiveness test. That's whenever they start issuing a new rule, they pause for a moment and look at, is it good for the finance makers in Europe, or is it good just for the finance consumers, and where the only beneficiaries will be the finance makers from outside Europe? Because among all the people who sell finance in Europe, there are many of them for whom Europe is part of a division called Europe, Middle East, and Africa. For us, Europe is home.
Wow. Thank you very much. So let me briefly wrap this up for you. So we're barely out of the woods, phase one, says Monsieur Boujna. And actually, for Mr. Matos, we'll have to wait until the fourth quarter to get a better idea of what kind of recovery we're seeing. Madame Baudson mentioned that actually it might be a K-shaped recovery, which Mr. Gir translated as there will be a differentiation. There will be some industries will fare well, some won't. We should be confident, nevertheless, says Monsieur Boujna, who's the optimistic on the panel here, because first of all, capital markets are doing quite well, and there might be a little bit of a correlation here. And he also pointed out that interest rates are going to stay low for quite some time, which brings me to actually the role of the public sector. And Monsieur Lemire noted out that the government and the central bankers actually have played a huge role, a key role, a crucial role, without whom we wouldn't be here, actually, and they should keep doing it. Though perhaps, he mentioned, power shouldn't perhaps rest in the hands of the sole health ministers in the near future. We hope for that. But central bankers are certainly doing their job. They should keep doing it. Government is spending, and spending by the government is not so bad, says Mr. Boujna, who's extremely French. Providing, though, that taxpayers are not actually, that taxes, forgive me, Monsieur le Maire, that taxes are not raised, as Monsieur le Maire said. Well, it's indeed about proper allocation of that public money. And we should make sure that we have an efficient allocation of that. It's about behaving, said Monsieur le Maire. And indeed, Monsieur Matos pointed out that it's going to be very different. The new normal won't be what we knew. Industries will be very different at the end of this crisis. The money will transit to a green and sustainable recovery. And Europe should definitely take this opportunity. Europe is well placed, has the right tools, the proper tools to do that, to reinvent itself and to move away from the sluggish growth that was seen over the previous decades. It's a clear avenue to regain growth. Let me quote Monsieur Matos on this. Debt will be higher, said Madame Baudson. Yes, we know, but we have to choose. It's about helping channeling the money, huge savings by the French notably, and we have to think longer term. When you think longer term, there's no question that the recovery will be green, Monsieur Gir said. There's a stimulus package, he pointed out, that is actually really supporting the green energies, such as hydrogen, and investors are really attracted by that. But we have also to be selective, and again, it's about being efficient once more, Monsieur Gir, as you said, and away from greenwashing. We need also a clear taxonomy. We need consistency at the European level across the board, regulation, standards, every possible way, Monsieur Gir said. And Monsieur Matos mentioned that Europe is so well placed once more. It's an open economy, it's open for business. It's very important for an international bank such as HSBC, but Europeans also have to get their act together. Monsieur Le Maire spoke very fondly of Europe, and indeed we have a very specific, decent social model that helped us going through this crisis in not such a bad shape as the rest of the world. Madame Baudson said she's confident. CMU will happen, said Mr. Boujna, and we will be able to all come together and show solidarity. If we do that, Monsieur Nuno said, there's a very good chance that Europe actually stands higher on a better ground, has a better pace of growth at the end of this crisis. Is it going to be a sustainable growth that we are going to foster? Sustainable growth is a new thing, pointed out Monsieur Boujna. And then I will leave you with this comment that sustainable growth will be the new thing after the pyramids, the cathedrals, the religious wars, I'm not sure about this one though, and Versailles. Thank you very much, everyone. Thank you, Madame Baudson, Monsieur Lemierre, Monsieur Gir, Monsieur Boujna, and last but not least, Monsieur Matos. Thank you.
Before moving on to the next roundtable,